Good afternoon, ladies and gentlemen, and welcome to the Altitude Group PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question in the box below and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be made available via your Investor Meet company dashboard, and we will send you an email to notify you when they're ready for you to review. Before we begin, we would like to submit the following poll. If you could give your attention to that, we'd be most grateful. I'd also like to remind you that this presentation is being recorded. I'd now like to hand over to Nikki Stella, CEO, and Graham Couturier, CFO of Altitude Group. Good afternoon to you both.
Thank you, Mark. Good afternoon. And we're really pleased to be with everyone here today. What we'll do is we'll start off with a quick introduction. My name, as Mark mentioned, is Nikki Stella, Nicole Stella. I am the CEO of Altitude Group, and I'll quickly click to the next slide. So I've been involved in the promotional products industry for the past 16 years. My previous role was with promo marketing as president of the Promo Marketing Media Group, and I have extensive experience in working with suppliers, distributors, and service providers throughout the industry. And then with that, I'll pass over to Graham real quickly, and he can talk a little bit about his background, and then we'll continue on with the presentation.
Yeah, good afternoon. My name is Graham Couturier. I'm the Chief Financial Officer of Altitude Group PLC. I've been with the business 3 years now. I'm a chartered accountant by trade, and my background includes board-level finance positions at various entrepreneur-owned and private equity-backed businesses, all of them sort of high-growth, fast-scaling businesses. I also have a background in information technology, having spent a number of years implementing large-scale systems for Accenture.
Wonderful. Thank you, Graham. And so briefly, I know that we have quite a few holders with us today, but there are those that might not know about our industry. So I'd like to give a little bit of background on the marketplace that we serve. That way everybody is at an understanding of who we are, the industry that we work within, and what we do within that industry. So the promotional product industry is one where we have, and let me do the same. I will switch off my screen so that you can see better. So it's a highly fragmented market, and basically the focus of this industry is any product that you can place a logo or personalization or customization on. So things like baseball caps, t-shirts, embroidered polos, notepads, all sorts of different products where you can, corporations and educational institutions can place a logo or some sort of a customized indicator of who they are on there. And so the perceived largest player in the industry is for Imprint, holding less than 3% of the market share of the industry. So that's an important point to note. So the US market is $23 billion market, and it's highly fragmented, elongated supply chain. And I can push over to this next slide that really shows you the supply chain. So it is a legacy supply chain where you have your manufacturers in China or Bangladesh overseas that are actually producing those products. Then you have your suppliers, and those suppliers may be located either in the US or in the UK, and essentially they house products. So they have warehouses filled with baseball caps, pens, hand sanitizer, all sorts of different products where they can be personalized, customized, and logos placed on those to showcase a company's name or their indicators on that product. From there, you've got your sales force, and that sales force of the product is distributors. And those are the folks that go out to end buyer companies. They are working with Google, they're working with Amazon, they're working with Main Street businesses, plumbers, electrician companies, accounting firms, law firms, financial institutions, contractors, any industry that you can think of and business that you can think of that would want to market their business with product. And so that is your distributor. They are the folks that are going out to schools and other institutions to sell product. And then you've got your end buyers. And those end buyers are customers that as I mentioned, Google, Amazon, very large multinational companies, straight down to small businesses on Main Street. And where Altitude Group lives within that is a service provider to that marketplace, where we provide technology services, patented technology services to distributors that help them manage this elongated supply chain. We combine that with e-commerce platform where they can have a website as well as their CRM to create efficiency in their ordering. And so this provides them with a way to track and really grow and have that online presence in the industry and be able to sell to their clients. From there, and we can switch this, back in 2019, as you're aware, we acquired the AIM Smarter business. And what this did is it allowed us access to a $2.2 billion pipeline. So in 2019, when we acquired the business, there were 1,917 members. One of the things that I think is really important to note today, that even through COVID-19, and we'll dig in deeper into where we are today in terms of the COVID-19 impact, but we have maintained and actually grown our membership since 2019 to 2,085 members. And so these members of AIM are distributors in the industry. And quickly, if we go back to this previous slide, they sit in this center, this third circle of distributors. And those distributors are those that sell. And you can see in the bottom column there, the AIM member customers to Google, Microsoft, Cisco, Discovery, Levi's, Turner Classics, New York Yankees. So they have large-scale multinational customers, as well as those small Main Street customers too. And so the average gross value of, or gross revenue of that distributor is 1 million plus. That has actually increased from the time of acquisition in 2019 to from 974,000 annual turnover per distributor to somewhere around $1 million plus average distributor sales revenue. And then we have that supplier base, which we'll talk about as we go further into the presentation. 175 preferred vendors in our VIP supplier program. And those suppliers have stayed with us. So that's one of the things that we'll talk about. We've had 100% retention of our preferred vendors in the program, even in this COVID-19 environment. And so one of the most important points to touch upon today is the recovery, because I've been hearing a lot about the recovery of the promotional product industry in these days of COVID. And so I was able to, through one of the media partners in the industry, find this depictive slide. So this came from Advertising Specialty Institute in their 2020 State of the Industry report. And so if you look at over the course of the last years of the 2000s, where we've seen economic impact from outside forces. So in 2001 to 2002, from 9/11, the recessions of 2008 into 2009, and now with the COVID-19 economic impact that we've seen, the industry has rebounded. And this is one of the most important things that we can talk about today, is the rebound of the industry. So while we have seen downturns across the promotional products marketplace, this rebound that has occurred over the years actually takes the industry beyond where it was previously. So what we would anticipate now with 2020 is that when we see events starting to happen again, football games, concerts, corporate events, all of those things, that downturn that we've seen in 2020, we would anticipate once we return to some economic normalcy and life as we all know it, being able to be out and about again in a much more normal fashion, we anticipate the promotional products industry to rebound as well. And so what are our AIM members talking about in terms of recovery? And when we go back to that previous slide where we show the supply chain that showcases the manufacturers, the suppliers, the distributors, and the end buyers. So our AIM members at that point of acquisition in 2019, they were that $2.2 billion pipeline that we discussed. they had that average turnover of 974K. And so what has happened is we've surveyed our members throughout this COVID-19 time period to find out what do they expect in terms of recovery and where do they see things returning so that they can be selling back to the New York Yankees at the same level as they were back in 2019. So nearly 30% of the AIM members in our network expected recovery to begin in January of 21. So this was just prior to the new year that we did this survey back to our members. Nearly 47% of the distributors in our network expect recovery in March of 21. And 18% reported being back at work and doing well now. And we can talk a little bit about why that is. There are certain sectors of the industry that are doing well, that are strong. Healthcare, education, professional services, construction. Those are markets that continue to do well despite COVID-19. And then, but also that move to PPE. And so one of the things that we saw during the COVID-19 crisis back in February of last year, we knew and we could see through our data insights and through our systems, there was this rise in searches for hand sanitizer. And in that, we also were able to talk with our supplier network, and those suppliers were reporting those same things back to us. So we saw that something was occurring. And in that, then in March of 2020, the lockdown happened, and we knew that something was going to change. We saw this bottleneck, and we were able to work within our distributor network and our suppliers to help them be able to sell PPE products, whether that be face masks, hand sanitizers, a whole myriad of different products. So many of those, that 18% that are reporting to being back and doing well now, were nimble. They shifted, they pivoted with the times, and they were able to continue to sell to their clients in this strange new environment that we've all been in. And with that, I will let Graham take over. He can run through some of the financial highlights, and then I'll dig back in for you to talk a little bit about more of what we did during this COVID-19 time period, our position with PPE, how we helped our distributors, through the network, be able to provide these products, as well as our future facing, what are our goals and what are some of the programs that we are working on today. And so with that, Graham, I'll let you take over.
Thank you, Nikki. So group revenue from continuing operations increased by 1.1 million or 36% to 4.4 million in the period. And underlying that, AIM US revenues increased to 3.9 million versus 2.2 million in H1 2019. So this was assisted by the group buy program in the US and delivered an adjusted US operating profit of 0.5 million. So the 1.7 million increase in US revenues includes approximately 2 million of new revenues from the group buy program. So in the early stages of COVID-19, personal protective equipment was in very high demand and difficult for our distributor members to source. Using the AIM preferred supplier network, AIM Smarter was able to arrange PPE purchases for the AIM membership. So whilst group buy activities are expected to continue in the future, the situation in April, May and June of 2020 was quite unique. And we don't envisage undertaking group buy activities of this scale again in the near term. So the group's throughput related revenues were significantly lower than our pre-COVID-19 expectations and reflect a significant reduction of more than 50% in promotional products activity across the industry in the quarter to June 2020. Whilst industry activity has recovered during the latter half of 2020, it remains significantly lower than the prior year, and we expect COVID-19 related disruption to continue to impact the group's revenues throughout 2021. However, the recovery is coming, as Nikki said, and our distributor members keep telling us that things are getting better. Just then to briefly touch on the fact that we've got a 1.7 million increase in US revenues, but only a 1.1 million increase in group revenue. This reflects lower revenues in the UK in the period to September, and is comprised of broadly even split between timing differences on revenues related to catalogue groups and the impact of COVID-19. So the timing differences relate to recognition of advertising revenues from the Envoy and Spectrum catalogue groups, which the group operates in the UK. both of these catalogues ship in the first quarter of the calendar year. Hence, there's no advertising revenue contribution in the period to 30th September 2020. The remainder of the delta is directly due to the impact of COVID-19 and comprises lower search and throughput related revenues and the impacts of discounts, license reductions, and/or temporary suspension of services across the group's software portfolio. Again, this is another area where we're now beginning to see sustained recovery, with people adding back users and licenses as businesses come out of having furloughed their staff. So the AIM core gross margin was maintained at 2019 levels when we exclude the impact of the group buy program. So I'm sure people have done the calculations, and our group percentage gross margin dropped from 91% in H1 2019 to 57% in H1 2020. This is essentially driven by those group buy activities, which, whilst contributing significantly to revenue, have a much lower percentage margin than the group's other revenue streams, which typically have little in the way of directly attributable costs of sales, reflecting the SaaS type nature of the services that we typically deliver. So the group achieved an adjusted operating profit of 0.3 million, despite the significant impact of COVID-19. This is really due to a combination of innovative thinking to create alternative revenue streams and tight control of costs. So on the cost side, we instituted temporary salary reductions of 20% across the executive team and reduced working hours across all other employees. Our total administrative expenses for the period were 3.1 million, including the benefit of 0.4 million of paycheck protection funding. So the Paycheck Protection Program was instituted in the US to protect jobs during the worst lockdowns of the COVID-19 pandemic. And we've received confirmation the group has met all the conditions required for full forgiveness of the paycheck protection funding. And this has been accounted for in accordance with IAS 20 government grants and offset against the expenditure it's intended to cover, which in this case is payroll costs. All this gives an adjusted profit before taxation of 0.2 million.
Oops.
So I've just switched on to the next slide. So adjusted basic and diluted earnings from continuing operations per share of 0.3 pence. And cash inflow from continuing operations before changes in working capital of 0.2 million. The most positive news I think I can sort of highlight to everybody in all of this is that as at 30th September, the group was debt-free with net cash of 1.2 million. And as of 22nd of January, we had net cash of 1.3 million. And against this background, our cash inflows are expected to increase over the next couple of months, reflecting the settlement of annual agreements. So the background to this is a significant portion of the group's revenue is earned under agreements which run January to December and are settled on an annual basis. Hence, the group's lowest cash position has always been forecast to occur in January 21. So we continue to be prudent in cash conservation and are confident that, subject to the continuation of the steady recovery that we've seen, Altitude has sufficient financial resources and liquidity to trade through to more normalized market conditions. I'll hand you back to Nikki at that point.
Great. Thank you so much, Graham. And so what we'll do is we're going to go through the overview of the business update right now for where we are today. And I think that it's really wildly important to note, number one, we have been working tirelessly. So immediately when we saw that there were going to be lockdowns imposed, we immediately responded and we immediately reacted to this. And as Graham noted, we were innovative, we pivoted, and we saw the needs that were happening across the United States in terms of the bottlenecks for PPE. And so we very, very quickly jumped into action. We were on the phone with our trusted supplier network. We were working with them to be able to give access first and foremost, because we were able to see from the insights that we had in terms of searches just skyrocketing with PPE need, with people looking for hand sanitizer, with them looking for masks and all of these other products. And so we jumped to that charge, and that's where we were innovative and we were able to create the group buys program to be able to pivot and continue to be able to trade within the network, remain resilient and relevant to our membership. And that's where you see our ability to hold membership steady at 2,085 in a time period where we know that businesses were completely shut down across the US, furloughs on supplier side in that March, April, May time period. So we really jumped the charge, and we were working tirelessly throughout that period. And so that shows in our results that we traded profitably during this time period, enacting immediate and effective response to the COVID-19 pandemic and subsequent lockdowns. We also started to put together some, and I'll show you these in just a moment, the COVID-19 business relief program, where we were working with our membership to help them to learn about, not only were we able to access the government payroll protection plan ourselves, but we were able to put this into place to help our members gain access to this as well. And we were able to put together packages and programs to help them stay in business, know what was happening within the industry, know what was happening with trusted suppliers, access PPE throughout this entire time period. So we had a robust performance in H1, resulting in the adjusted operating profit of 0.3 million. And then we were trading within our existing cash resources so that we were able to remain debt-free, and with the current cash balance of 1.3 million. So we were very, very prudent in protecting the business and making sure that we took great care of the company, but also enacting different things and pivoting so that we could respond to the time period that we were in. And again, our AIM membership through all of these efforts remains stable at 2,085 members. And again, we've retained 100% participation levels with our preferred partners. So some of this was through the group buys activity, but additionally, we locked arms and we worked together with them to make sure that we were providing relevant information to the marketplace. And we all know that this is a period in time. This too shall pass, COVID-19. And so we are seen in the marketplace as an innovator, as a company that works with, collaboratively with our suppliers, and we have stood by them and they have stood by us. So we've been able to retain that 100% participation level. And then recovery. So as I showed to you in that previous slide, so very important to note that we do anticipate, once we've seen some relaxation of imposed regulations around COVID-19 and restaurants beginning to open up again and concerts happening and corporate events happening, we do expect recovery. And so right now, as we watch through our systems, we've been able to see a progressive improvement up to circa 70% of the original volume expectations since the steepest point of decline in April of 2020. So we saw that drop happening through our systems. We could see what happened in late March, April, and May. And we are also seeing that steady progression of orders coming back through up to 70% of where we were. And then that other focus, and something that we had launched in August 2019, we had a beta program that we launched very carefully, and the AIM Capital Solutions program. So this is the sort of capstone premium and enhanced membership program that allows our members to access various services. It requires full system order processing, so it's mandatory that they utilize all of our systems to process their orders. They receive our innovative technology and website access so that they have that online e-commerce capability. They receive administrative support and supply chain finance services to help them grow their business. And we'll talk a little bit more about that as we go forward. But then, just to drive home what we have been doing, we have been working tirelessly during this time period of COVID-19, and we moved to a virtual work environment with zero impact on teams and our ability to work with our members and our suppliers. So no impact or interruption to the way that we run our business. We launched our group buys program to provide members with access to personal protective equipment, and this drove significant revenues in Q2 and Q3. And we assisted and educated our members in how to access PPP government grant funds. We ran webinars and all sorts of informational sessions for them to access so that they too could tap into these programs. We had real-time information regarding supplier closures, delays, and product availability. We provided COVID-appropriate marketing tools, which I'll be able to show you a little bit today. And we shifted to all virtual events because we know that one of the most important things for our membership is that ability to network, that ability to speak with one another and to speak with suppliers so that we can continue that virtual cycle of success where they're able to tap into our supplier base, they can continue to tap into marketing tools, and they can continue to converse with their customers. A lot of the questions that we had from them was, how do we approach our members or our client base at this time? And we were able to work with them and help them learn about how to interact with their clients with empathy and with care, but still transact and trade within this environment. And so one of the additional things and most important things is our business model, our routes to revenue growth, and how do we capture revenue from our programs and services. And so this clearly sets that out for everyone. That first pillar is the AIM membership, that base AIM membership that we talk about when we acquired the business back in 2019. And who are they? Small businesses across the United States that are promotional products distributors, print brokers, uniform distributors, office supplies. Sometimes they have a myriad of different services that they provide to their clients. And what do they receive by being an AIM member? They receive discounted pricing, access to elite services, our SaaS technology tools to drive efficiency online, their marketing services, supply chain management, and then that community that we spoke about, that networking, that ability to learn more about what's happening in the industry, because all too often our members and distributors as a whole are on an island and they don't have a full view. So we allow them to be a part of a community, to collaborate with us and have access and understanding of what's going on in the marketplace around them. And what do they pay for this? They have a monthly subscription fee, elite services and those fees, the supplier partner transaction fees, and then business-to-business partner fees that we are able to glean from those business-to-business partners. And then if we shift all the way to the right-hand column, you can see our VIP supplier partners. And we've spoken about this in our B2B partners as well. And so those are your promotional product suppliers. When we hearken back to that supply chain slide that I showed at the beginning of the presentation, they sit after manufacturers, those overseas manufacturers. Then you have your supplier base, and they have inventory in the States. So they are large facilities that are warehousing product that is sitting on a shelf and ready to be printed, where that logo is going to be placed on that product. And then our B2B partners. So whether that's shipping partners or other business enterprise partners. And we promote these folks. So again, it's that virtual cycle of success. We promote them to our members so that our members have access to the best pricing through these partners. And what do our VIPs partners receive back in place for this? Top placement in our product search, priority placement in all of our elite member programs, marketing exposure in the publications that we produce, our newsletters, our catalogs, social media posts, webinars. They also receive access to the members at live and virtual events, priority opportunities in the group buy programs that we produce, access to our monthly member list, a listing in our directory, merch box placement. And these are some of the products that I'll share with you in just a moment. And then what do we receive back from them? Transaction fees on all of the members' orders through also the ACS affiliate orders, which we'll talk about in just a moment. So we're receiving transaction fees across all orders that are placed. And then also we receive fees from events and sponsorships. And so then when you take a look at that center column, this is that new launch. And we've been talking about this for some time. We did that beta launch in 2019, and now we've gone live with this. And our customer in this instance is the small business promotional product distributor with an average turnover of anywhere from 500 to 1.2, 1.5 million in turnover, sometimes higher, sometimes lower, but that's really the sweet spot that we see. And what do they receive for this? They receive working capital support, back office administrative support, where sales tax, this is a big issue in the States for them to be able to navigate that. So we offer all of that back office administrative support to be able to handle that. Requires mandatory use of our order management system and our marketing services. Strategic business development, freight programs, access to our freight programs, supply chain management, and then access to specific community and professional development geared just towards their business to help them grow. And how do we capture our routes to revenue here? We charge a transaction fee on every order that the distributor places through our systems. We also receive fees through our supplier partners and then our business-to-business partners. So when we acquired the AIM business, we have that pipeline, that 2.2 billion pipeline, where we work to be able to tap in, to monetize, and to be able to, excuse me, to be able to capture fees across the pipeline. And so as we have grown and matured, we're able to navigate this and to be able to tap into fees across the various different programs as we've been able to launch them. And so essentially, it's a very focused routes to revenue growth through various different programs. And what we have initiated within our offices internally is corporate continuous improvement programs and agile initiatives with our technology. So we are always constantly looking at how do we improve what we do, how do we do these in micro moves so that we continue to move the needle with frequency. These aren't things that are happening over long stretches. We're able to, through agile initiatives, continue to move the chains all the time. So we're always looking at how we can improve what we do and get better and better every single day. And so continued development of our preferred partner network. We're always reviewing them. We're always looking at them. We're always taking a look at to see through data insights, who should we be including into our network as a preferred vendor. Continued growth of the AIM membership of high quality promotional products distributors. So what's really important here to note is that we were able to increase the average value of the distributor that is in the AIM network, going from 974,000 turnover per year to over 1 million. And that's really important to note that particularly during the time of COVID, did we have some attrition of members? We did, but we saw that across some of the smaller companies out there that decided that they were either going to close up shop and retire or some of those sort of things, but we replaced them with higher value, higher quality distributors in the marketplace that were able to maintain and grow our membership levels from that 1900 when we initially acquired the AIM membership or the AIM company to that 2085 where we are today. And then continuing to deliver added value services, leveraging our existing applications, our technology, our resources and expertise to be able to help our members and our supplier partners grow their businesses throughout the AIM purchase pipeline. Develop and sell additional added value services through our applications and marketing expertise, and then continue to innovate our technology to drive efficiency, increase order value, and help both our suppliers and distributors grow. And then Graham, if you wanted to go through the financial review.
Yes, sure. I'll just pop that on a slide. So I'll keep this bit quite brief because I think we've touched on a lot of these points already in the financial highlights slide. So significant revenue growth of 33% to 4.4 million, assisted by the group buy program. Recapping from earlier, US revenues increased by 1.7 million, driven by the new group buy activities. UK revenues were 0.6 million lower than H1 2019, comprising timing differences on catalogue group advertising revenues and the impact of COVID-19 on software and throughput related revenues. So gross profit was down 17% to 2.5 million. This was due to significantly reduced throughput related revenues, which are typically high margin revenue streams, and the lower margins on group buy activities generated in response to COVID PPE demands. Our adjusted operating costs of 2.2 million include the benefit of 0.4 million paycheck protection funding that has been accounted for in line with IAS 20 government grants and netted off payroll expenses in period. All this gives an adjusted operating profit of 0.3 million, and a loss before taxation of 0.6 million, despite significant impact from COVID-19 during the period. Moving on to the balance sheet, our intangible assets comprise acquired customer relationship assets and capitalized software development costs. In total, there is 1.6 million of acquired customer relation assets in AIM Smarter LLC, the company which acquired the AIM membership group in January 2019. The remainder is capitalized software development costs, which sit in Customer Focused Software Limited, the UK company which primarily develops the software that's used across the group's different activities. The 0.3 million increase in goodwill reflects completion of a purchase price allocation report by a third-party valuations expert. This was conducted as part of our FY19 audit procedures. This is effectively a theoretical split of the £5 million that was paid for the AIM membership group, where we didn't acquire any physical assets. So a number of years ago, that would simply have been accounted for as goodwill. But under IFRS, we're now required to consider what portion of that excess consideration is in relation to buying a customer relationship. The 1.6 million of inventory at the end of H1 2019 relates to ad products. And obviously, it's now nil at the end of H1 2020, as we've disposed of that business. The receivables balance includes accrued income in respect of our AIM Smarter preferred supplier program. So as we previously mentioned, certain revenue streams are settled on quarterly and annual cycles. And for that reason, the group will always have an accrued revenue balance at each period end, with the magnitude of that balance fluctuating depending on where we are in a calendar year. Cash of 1.2 million at September 30th. And the only other thing worth mentioning, I think, is the non-current liabilities of 1.3 million are primarily comprised of liabilities recognised in respect of office leases under IFRS 16, where under IFRS 16 companies recognise right of use assets on their balance sheet and liabilities relating to the leases on those office assets. There was very little in the way of non-current lease liabilities at the end of H1 2019, as all of the group's leases were coming up for renewal within the next 12-month period. So moving on to the cash flows during the period, the investment in working capital reflects growth in AIM Capital Solutions funding. So the AIM Capital Solutions business does require an element of working capital, and that will grow as we expand that business. To date, that's been funded out of our own cash resources. Getting funding to supercharge the growth of that business is something that we are currently working on. The intangible asset purchases shown comprise expenditure on capitalized software development. Tangible assets purchased in H1 2019 comprises purchase of new machinery to expand the ad products production capability. Obviously, with COVID, we have reined in all expenditure on any kind of tangible assets unless absolutely necessary. One of the questions people had was what the repayment of borrowings was. So the repayment of borrowings cash outflows reflect settlement of hire purchase agreements in respect of the machinery, which was sold as part of the disposal of ad products. So as soon as that subsidiary was disposed of, we needed to settle those hire purchase agreements. Finally, cash inflows from shares issued in 21/19 represent the fundraise to acquire AIM and provide the working capital to scale up of US operations. H1 2021 cash inflow simply represents the inflow of shares issued in respect of employees exercising options. Sorry, 1 second. Okay, I think I'll hand over back to Nikki again at that point.
Yeah, thank you, Graham. And so I see one of the questions, and I think you did address this earlier, but I think it might be important to note once again real quickly here is, have we passed the lowest point in terms of net cash position? And you did note that we expected January to always be our lowest point in terms of our cash position.
Yes, that's absolutely correct. The way our cash flow cycles work is that we have a number of revenue streams where payments are made either quarterly or annually. And those agreements typically run across a calendar year, so ending 31st of December. And we would then expect to collect the cash in respect of those agreements over the next 3 to 4 months. Certainly through 2020, that was particularly challenging, with a lot of businesses delaying payments and having staff furloughed, making it difficult for them to operationally run their businesses. But the business will always have a fairly significant accrued revenue balance at the end of each quarter. And that balance will be at its maximum at the end of the December quarter.
So to that point, January is our, that is the point. So as we go through the remainder of the first quarter, or through this first quarter of the year, our cash position will continue to grow. So that is something important for us to note with everyone today.
The other point, Nikki, is our net cash position at the end of January also represents, there's about $0.75 million there of working capital tied up in AIM Capital Solutions.
Yes.
Which would be freed up if I can put an appropriate funding mechanism in place for that business going forward. That's obviously been very difficult over 2020 with all the disruption caused by COVID and people, delaying payment as much as possible to conserve their own cash. As we trade through into 2021 and things become more normalized, I've got, very strong views that is something that is eminently fundable.
Exactly, and we're working on that every day. And to that point, the ACS program is a very sticky one where we're able to capture transaction fees from both sides of the purchase. So not only do we receive that transaction fee from our supplier partner, but we also capture that from our distributor who's participating in that program. And again, it's very sticky and helps them to grow their business. So it's one that we are focused on. And so finally, in terms of the slide deck, I wanted to really discuss this outlook. So this has been probably the most challenging business environment. I'm sure that everybody who's joined us today can attest to this, the most challenging business environment in modern times. And so the board, myself, Graham, I know that we are truly pleased with the resilience, the effort and performance of the team and the business during this time period. We have worked tirelessly. And so what positioned us to be able to navigate this time period so effectively has been that digging out the foundation since the acquisition in 2019 and to build out the strategy of the business. And so through COVID and despite COVID, we were able to drive significant profit and growth through this time period. And so the pre-pandemic effort and our ability to act quickly and pragmatically in navigating the challenges have ensured our ability to trade profitably during the unprecedented period of disruption, as well as protect and position the group for sustainable future growth. So while there is still uncertainty about COVID-19, and as we emerge, and every single day, especially here in the States, we see things starting to, an improvement in terms of the overall numbers. We don't know precisely what will happen, but we do know that this too shall pass, and that we have a sustainable position for future growth. So our growth trajectory and strong position in the marketplace remains. And so through all of this effort, we have remained resilient, front-facing with our suppliers, front-facing with our membership, front-facing with our distributors who are participating in the ACS program, and as well as in the marketplace as a whole. And so one of the quick things that I wanted to do before we go today and move over to questions is share a bit about what we've built. And so when we flip over to the AIM website, here you can actually see our efforts at work. And so, as I mentioned, we jumped to the charge of COVID-19 very quickly. I knew very fast that we would have to remain resilient and ever present with our membership for them to, to be able to see us as a key partner during this time. And we did that. We did that with, real true fervor. And so when you take a look at the AIM website that we've built out, this is our presence to the marketplace. And you can see in that yellow bar across the top, the COVID-19 response updates. And here is where you could see we would have the resource center for our members to be able to access during this time period, where they would be able to see and visualize the group buys programs, some of the tools that we developed for them, the Back to Business Relief Package. And from this point, you can see oops, it opens it up into a new screen. You can see the COVID-19 webinar series, the AIM blog resources, the anxiety resource workbook, the digital idea generator. So we jumped very quickly into being able to provide our members all sorts of different tools that they would be able to access during the time period. From here, a member is able to jump into our directory. They can learn more about our supplier partners and how are they able to access various different programs by working within the existing suppliers that we have that work with us. So this tool is very, very strong for them. And we have upwards of anywhere from a potential 600 to 800 to 1,000 members that drop into our program on a daily basis. We have our merch box program. This is a program where we have our supplier partners products that are dropped into the sample box program, and then members purchase these boxes and send them off to their clients so that their clients can touch and feel and see them. And so from this page, they're able to order their 2021 merch boxes today. So we have built out a really robust set of tools for them where they're able to access all of our products, services, and tools. They're also able to learn more about our educational resources, our training videos, the tech suite system, where they're able to drop in directly from the website here and able to access and then start to process orders. And again, we have a variety of tools where they're able to access our events and learn more about our financing program. So the AIM homepage absolutely drops them into the ability to work with us throughout all of our various different programs and services. And throughout this COVID-19 time period, they were, be able to see real-time resources that we were able to help them with. And so, Mark, with that, I can pass back over to you.
Nikki, thank you very much indeed, and thank you, Graham. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard, and you'll be sent an email notification when that's ready for you to review. Importantly, I'd like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected to the opportunity to provide feedback in order that the company can better understand your views and expectations. Nikki, Graham, we received a number of pre-submitted questions from investors, and I know you've received a number through the live event, but perhaps I could just start with these. And perhaps I can leave it to you to attach who answers which question. But the first one is, when is FinCap, the company's broker, expected to release forecasts to the market?
Thanks, Mark. I'll take that one. So we don't currently have a timescale for working with FinCap to release a new set of forecasts. As I'm sure everybody's aware, the impact of COVID-19 continues to be severe, and we don't really know how long it's going to continue for. So in management's view, it's not currently possible to forecast with sufficient accuracy for us to put numbers out into the market in compliance with the regulatory framework that we have to abide by as an AIM-listed business. As soon as we feel comfortable that we can put something out that's sufficiently accurate, we will work with FinCap to do so.
That's brilliant. Thank you, Graham. There's two further questions. The first being, this meeting is welcome evidence of the management's wish to continue to communicate with its shareholders. Please can Nicole and Graham commit to issuing trading updates at least every 6 months in advance of the close period before results, and to meetings with investors on platforms also twice a year?
Do you want me to take that one, Nikki? Or?
Sure, Graham.
Okay, so in respect of trading updates, obviously we are an AIM-listed business and required to operate within the regulatory framework that AIM sets down. Trading updates will be released as and when it's appropriate to do so, or when there is any information that is required to be disclosed. We like to try and update as much as possible. I think it's been very difficult to do that during 2020 when it's been very unclear as to the magnitude and duration of the impact from COVID. And so going forward, I expect we should be able to update more regularly.
And Graham, I think it's also important to note, to remind everyone that we are on a March 31st end of year. So our year does not end in December. It ends in March 31st. So it's just one important thing to remember in terms of reporting timetables when many companies are on a December year end.
Very true. Thank you, Nikki.
Thanks very much. The final question, and I think this is for you, Nikki. In the results statement, Nicole said that our preferred partners remain unchanged at 175. What is the ideal number of preferred partners that she is targeting? And what is the target number of AIM members compared to the 2,085 currently in the US and just 146 in the UK?
So I think that it's important to consider the suppliers that we invite into the marketplace and to invite them into working with us. So we vet them very carefully. And so right now we are working with the industry's best of the best. And that's one thing that is important. And what we do is through data insights, through information that we have through our systems, we're always looking to see who those priority suppliers should be and always reaching out to those. So if we find that a supplier is working within the AIM membership, and they have significant impact in terms of sales through our membership, then we're always in talks with those folks to bring them into the AIM universe. And so we gauge that. But right now, we currently work with the industry's best of the best. And we do add in additional suppliers as we see them come in and appropriately add them into the AIM universe.
That's brilliant. Thank you very much indeed. Mindful of time, obviously we're coming up to the hour, but you've had a number of questions that have been submitted during the live event. Perhaps if it's possible, can I ask you, ahead of us then diverting investors to give you feedback, can I ask you to read out the questions and who it's from, where it's appropriate, and obviously I'll pick up from you at the end, and as I say, divert investors for feedback.
Yeah, and I did see one in here, and I'm trying to locate it really quickly, but something about recovery. And that's why I brought this slide back up, because I wanted to make sure that we did hit upon what did we anticipate with in terms of recovery in the industry. And so I talked about this a little bit, but I thought it important to harken back to it. The industry is one that is resilient. The distributors in the marketplace are a resilient group of entrepreneurs, and they are always turning up, every rock and stone to be able to transact in the marketplace and drive their revenue forward. So it's important to note that the folks that work within the industry are resilient. They work hard, they are strong, and they do come back. And so after 9/11 in 2002, we saw a significant rebound, and as you can see on this slide, the industry grew, and so it grew exponentially post 2002. The same happened in 2009, and we saw our greatest year ever in 2019. We entered 2020 with the wind at our back, and with COVID, the impact of COVID, we saw a lot of that diminish in terms of what suppliers and distributors were doing in the marketplace, particularly in March, April, May, and then we starting to see that tick back up and that recovery starting to happen. And as I mentioned earlier in the presentation, at that 70% recovery through our system that we're seeing now. So we are seeing that come back, and we anticipate that the industry will recover as soon as we get back to a normalized concerts, corporate events, all of those things that we would anticipate seeing, and that will really drive promotional products forward.
Thanks, Nikki. I think there's one other question that we can answer quite quickly. Francis E. had asked, are there any further disposals of business units envisaged in the UK, or is the Altitude Group as it stands in a stable shape for the future? So I think the answer to that is we don't envisage any further disposals. The group we now have is comprised of our operations in the US and operations in the UK, and they are fairly intrinsically linked in that a lot of the software that underpins the delivery of those services has been developed and built in-house in the UK by the team in Sheffield, and we don't see that there would be any benefit to segmenting the business out further.
Great, thanks, Graham. And then I see, what do you see as the greatest risk to the business moving forward, from Simon C. And I think that we have navigated probably through the most difficult period, and as I mentioned, the most difficult period for every business in modern times, to navigate this, to pivot, and I believe that we have navigated and pivoted in such a way that we really helped, number one, protect the business, remain relevant in the industry, and actually seen as an innovator in the industry, as well as grow the business through the group buys programs and the other initiatives that we've launched. So the greatest risk, I can't say what will happen with COVID-19. I do believe, as the US continues to navigate this and the UK continues to navigate this and move through it, that recovery will happen per this slide. And otherwise, we are heels in, focused, and working hard every single day to make sure that we continue to maintain, protect, and grow the business as we go forward.
That's brilliant. Thank you very much indeed, Nikki. Assuming that there aren't any other questions that obviously you're going to be able to address during the meeting itself, given we've got only 3 minutes before the close, I wondered if I could just ask you for a few closing remarks. And to investors whose questions have been submitted, thank you very much indeed. And obviously everything will be presented to the company, and we'll notify you when everything is ready for your review. So perhaps, Nikki, I could just hand back to you for a couple of words, and then I'll redirect investors to give feedback.
Wonderful. And I think that we go back to the outlook, right? So honestly, in the face of this difficult time, we have been tireless. We have been working. We have been pivoting. We have done everything that we can do to make sure that we protect, grow the business. And since the acquisition of AIM in 2019, we have developed the foundation and strategy of the business and have driven significant growth in both revenue and profit. So that can be seen since 2019, since that acquisition. The acquisition really, when you look at complementary businesses, the reason businesses come together is to make sure that you can drive both forward in terms of driving that growth. And we have been able to achieve that. And now it's making sure that we continue to navigate this time, which we have done. We've proven that we were able to do that. We've acted quickly, pragmatically, and we will continue to do so. And make sure that we position the company, again, for sustainable future growth.
That's very, very kind of you. Thank you indeed to both Nikki and for Graham for their time today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access meeting from our website, then the feedback page will appear. If you access this via the link sent you by email, you'll simply be asked to log back in to submit your feedback. On behalf of the management team of Altitude Group PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and good afternoon to you all. Thank you.